Okay, good afternoon, guys. Again, welcome to another session with your Prof. Zeus. And again, for this session, we'll be continuing our discussion about current liabilities. Okay, guys, how many of you have this one? Do you know what this card is and what is this for? Okay, this is actually a rewards card from Metro Market. So, if you buy from Metro Market, okay, you get points from the amount of purchase that you made from the stores, either from the retail or from the groceries or from the department stores. Okay, so in a way, you're being rewarded for every purchase, and portion of the the amount that you purchase will actually be given back to you in the form of some sort of points, which actually you can use later to purchase for other items. Okay, and why am I showing you this card? Because this is our topic for this afternoon about customer loyalty program. And this is not the only company that offers customer loyalty program. We also have SM Advantage. You also have, I think, Jollibee has their own reward card. Ace Hardware also has its own reward card. So almost everywhere you go or you shop, you will always have this reward card. So the question is, how do they account for this? For these rewards given to their customers. Okay, so this is about customer loyalty. Now again, we will be using here the concept of, or the new standard on revenue recognition for from customers. Okay, so therefore the mechanic of that reward system is that, like in SM, for every 200 pesos worth of purchase, you will be given 1 peso back, and then you can accumulate this, and therefore if the amount is huge enough, you can apply it to your future purchases. Okay, so therefore, like what we discussed earlier about premium. Okay, in effect, the single the single price or the single sales price is not only for the items that they actually sold, but also for the points. Okay, so let's have an example. Assuming that a particular establishment has generated sales of 100 million. Okay, they have generated sales of 100 million for current year. Okay, and then part of their rewards program is that they give 1 peso for every 200 worth of sales. So assuming that all of the customers have their rewards card, so therefore that's 100 million divided by 200. Okay, so therefore the rewards, the value of the rewards is 500,000. Okay, so again, as I said earlier, we have to now allocate the 100 million sales between the sales of the main product and of course the rewards that will be applicable to future sales. And so therefore, this the portion for the rewards is now recognized as an earned or liability on the part of the company with this reward system. Okay, so therefore, again, we allocate based on the fair market value of the item and the reward. So assuming these are the market values, so therefore, so the allocation would be 100 million divided by 100.5, 500,000 divided by 100.5 times 100 million. Okay, so this is 100 divided by 100.5, and this is 0.5 divided by 100.5 multiplied by 100 million. Okay, so let's do some calculations here. So 100 times 100 million divided by 100.5. So therefore, this is 99,502,480. Okay, so that's 100 million. So this is 497,512. Okay, so these are now the allocated values. So for the sales, that's 99 million 502,488 and 497,512 for the reward. So therefore, how are we going to record this transaction, sale transaction? So again, debit your cash or accounts receivable for 100 billion. Okay, credit your sales for that amount. That's 99,502,488, and credit your unearned revenue from customer reward, customer loyalty reward. For how much? 497,512. Okay? So this is now your entry to record the sale of 100 million. We allocated the sale of 100 into two parts. The main product of 502,488 and 497,512 for the loyalty program. Okay? Now, again, this will involve a lot of management estimates and judgment. Again, based on historical performance, how much of these rewards will eventually be redeemed by the customers, because not all of these rewards will be redeemed. Why? Just like me, I lost my first SM Advantage card, so all the points there are already forfeited. So not all of these rewards will eventually become, or will eventually be redeemed by or used by the customer. So assuming that on the first year, it was estimated by management that 90% of these rewards will eventually be redeemed. So 90%. However, on the first year, the only redemption is 45%. So therefore, on the first year, there's redemption of 45%. So that's 45% over 90% multiplied by 497,512. Okay? So this is the amount that was redeemed by the customers. Now, assuming that there's no additional cash given by customers, meaning they just use whatever they have, whatever value they have in store in the card. Okay? Because if the value of the item is higher than the value of the card, then they have to pay. But for simplicity in terms of discussion, we'll just assume that the values are the same. So times 0.45 divided by 0.90. So this is 248,756. So this is the amount. This is the amount of loyalty rewards that has been used by the customers. Okay, which they use to purchase additional goods or services to the company. So how are we going to record this? Usage or availment. So debit your unearned revenue for customer loyalty reward for 248,756, and then credit your sales for the same amount, 248,756. Okay, so this will be the entry for the first year. So how much will be the balance of your customer reward? So if you look at your unearned revenue from customer loyalty reward, so there was a first credit of 497,512 and a debit for the usage or redemption of 248,756. So the balance of your unearned revenue is 497,512. That would be 248,756. Okay? Now, how about on the second year? Let us assume that on the second year, management or the actual redemption is say plus another say 30% on the second year. Okay, so how will that affect our computation? Okay. So on the second year, so you have 30 plus 45%, that's 75% already of the 90%. multiplied by 497,512. So therefore, 497,512 times 0.75 divided by 0.9. So that's 414,593. Okay? So this is now the value of the rewards that have been used by the customer. Okay? Now remember, during the first year, we recognized, or there was a usage or redemption of 248. So that is already part of the 414 because this is already accumulated. So we deduct the 248,756. So therefore, the revenue that we will recognize from the redemption of customer reward is the difference. 593 minus 248,756. Okay, so this is 165,837. So therefore, the entry here would be debit your unearned revenue from customer loyalty reward, 165,837, and then credit your sales, 165,837. Okay, so on the third year, so the same process. Okay, year after year. So assuming on the third year, management made another estimate, assuming that because of the turnout of the redemption, they expected on the third year everything will be used up by the customer. So therefore, there's going to be 100% usage on the third year. Okay, so you just have to follow the procedures that we did for the first 2 years. Okay, so this is very easy, and I guess this is very close to your heart because you are also experiencing this customer loyalty reward. Okay, Petron has their own. I think Shell is connected with the BDO reward, meaning the SM reward. So for every time you purchase fuel products from Shell, you also get to have a reward of 2 pesos for every 500 yata, parang ganun. So okay, so this is for the customer loyalty, and it's the same company who provided the loyalty reward. They are also the same company who to whom the customer can redeem the reward. Okay, because now for a fact that there are companies na iba yung bibigay ng reward. Like what I mentioned earlier, you buy Shell products but then you get to redeem it to SM. So in that case, ano nangyayari? Iba yung nagbibigay ng reward, iba yung pwede nilang paggamitan. We'll discuss about that in the next meeting. Okay? Thank you very much again, and I'll see you in the next session. Bye.